This is my strategy. All I'm doing very, very simply is identifying whether we are bullish or bearish. In this example, if we are bullish, I'm going to measure the trading range. I'm going to identify my optimal trade entry area. Now I'm doing this on a higher time frame because on a smaller time frame, I'm going to observe lower price action in the form of this downward trend until price comes into my OTE level area and then gives me a shift in market structure to the upside, hopefully leaving some form of fair value gap that I can actually take an entry off of, hopefully during the London session or the New York session, where I can take advantage of price trending in the right direction as the higher time frame. So as you can see, price is moving higher and price has come back into this area of imbalance right here. When price comes into this area here, I can clearly see a shift in market structure. I can see an area of imbalance. That is my entry right there. Not to mention, we are in line with the open of the New York session. That is all I'm looking for. I'm trying to keep things as simple and basic as possible. I don't overcomplicate it, and I do this by following a very simple step-by-step process.